Hello, this is Jerry from ForexTradingMagic.com, trading the laws of charts and men. This is lesson 5 in our series on how to trade pivot point reversals. In lesson 4, we discuss how we would project our take profit or profit target and how most likely the selling pressure that would come in that is required to push or stop the upward price momentum. The first level of selling pressure can be seen by this green bar here, this green upward bullish bar, and how this represents sellers, because once they've bought or entered the market long, they are now potential sellers, or people who will sell their position, in particular once they become negative, as they have here in price. Let's say you bought here, now price fell down here, you're negative. So when price does eventually work its way back up to your entry point here, you're looking to sell to at least break even or make your profit very negligible. And so we can know with reasonable assurance that a high degree of selling will take place when price reaches the level of this bar. And if we've entered long anywhere here, we know that we would take our profit anywhere within the range of this bar. And the most conservative level would of course be the low of the bar. And then in the same way, we look at our projected stop levels and we work it upward instead of downward. And now we may want to take profits at the open, because that is another minor support and resistance level. Or we may want to try and be a little more aggressive and take profits at the the close of the bar. But as we can see here, why that would be considered a more aggressive policy to take, because price did not reach that point. And you can also take it and say that I'm going to take profits when price reaches the high. And so we go from a range of a more speculative or low probability to a range of more high probability and most likely to be acquired if we project our potential profit or exit point at the low of this selling bar here. And now that brings us to 3-bar reversals or 3-bar equilibrium. After a reversal, price will have the tendency to test a range of 3 bars, and those 3 bars would be 3 bars prior to the reversal or pivot reversal bar, which we discussed in a previous lesson. We count 3 bars starting with the swing bar, and that would be 1, 2, 3. And the top of this 3rd bar would be a place of minor resistance, and we could expect price to at least pause or stall at this level. And we can also see that this level happens to coincide with the low of what we have already identified as the selling bar. So this is a confirmation that this price move from this bullish reversal, thrusting price upward, would not go above the high of this bar. And once price is rejected or reverses back down off of this level, we can expect a reversal to occur and back down in the other direction. And in this particular situation, we can see that this is exactly what happened here. Now, we have to understand that even though price went above the low and the open of what we have identified as this selling bar, price never closed or had a closing price above this level, and so that signals a failure of the up move, and that a pivot reversal downward in the opposite direction can be anticipated with reasonable certainty in most cases. And so now, once again, to recap, 3-bar equilibrium. We start with the swing bar and count next the stopping bar, and that would be 2. The swing bar would be 1. The stopping bar would be 2. And the bar immediately prior to the stopping bar is 3. Now, just bear with me for a moment, because I know that you're looking at this bar and saying that this would be bar 3, but we would discount this bar because it is an inside bar and a very small range bar, and we'll get into more of our counting guidelines and exceptions when we start looking at pivot reversal and exceptions to our bar counting rule and how it applies to support and resistance and entering exits and stops and take profits. Okay, so now we know what 3-bar equilibrium is, and anytime there is a reversal bar, you start with that reversal bar and count back 3. 1, 2, 3. And the high of the third bar can be expected to act as a resistance to any further price move or close above that level. And you can start anticipating turning around, exit the long trade, and now possibly getting in for the ride down. And if you can do that on most of these swings, get in for a piece and not necessarily all of the ride up, and get in for a piece and not necessarily all of the ride down, and you can do that for the majority of these up and down swings, then you will no doubt be profitable. And it is quite simple, especially when compared to everything else you see out there. Okay, now we understand 3-bar equilibrium. And in our next lesson in the Trading the Pivot Point Reversal series, lesson 6, we'll talk more about how to lower your stops and how to, in many situations, reduce your reasonable stop level to 15 points and maybe even less by entering on some lesser intraday time frames and looking for a pivot there. And so that is what we will discuss in our next lesson, lesson 6. So this will conclude lesson 5, and this is Jerry, and I will talk to you next time from forextradingmagic.com, trading the laws of charts and men. Thank you.